Mayuresh Joshi is joining us. Mayuresh, I'm going to ask you about the real estate stocks, but for the time being, I think we need to focus on some of these IT names. The IT index itself should come up for you on the screen because quite a few of these stocks have moved to the low point of the day. Remember, we have TCS's numbers later today, and also we'll be watching out for the commentary. But the IT index has moved to the low point. HCL Tech has taken a bit of a plunge. Infosys has dipped a little bit, and TCS as well has dipped a little bit. So the index on the whole has moved lower. Street getting a little bit nervous, I think, ahead of these numbers. Mayuresh Joshi, as I said, is with us. Mayuresh, first up on the real estate stocks, what's the view out there? We had a Baman of Rustamji who's joining in today, and he said second half of the year is very, very good. A few days ago, we had Prestige Estates who went ahead and they increased their guidance to 20,000 crores. How do you view this sector? Because some of these stocks, they're at multi-year highs.
Afternoon, Nigel. Oh, absolutely. I think 2-3 things which are happening, which is very positive for the sector as a whole. One, I think the unsold inventory for the sector across pockets is coming down steadily, specifically in the post-COVID era. So that's a huge, huge positive. The second angle, obviously, is the pre-sales velocity. So I think any new launches that are coming through are getting absorbed pretty well, and that probably adds to a lot of value in terms of consolidated cash flows that a lot of these listed developers get. And third, in terms of their existing inventory as well, of new launches and the expectations in terms of cash flows coming in from that over the next few time periodicity, if you bucket that up in 3, 6 months, 9 months and a year, it seems pretty good because of the kind of footfalls that you're probably getting. Relatively, I think South-based players react more in terms to how the IT sector probably performs. The west part of India is probably far more stable in terms of demand dynamics. And therefore, the expectations of the sector expected to do well with festivities around the corner. And assuming that you're in the mid-cycle of a 5 to 7 year property boom period, I think good times in terms of consolidated cash flows can continue for the sector as a whole. So Godrej Properties is making a very nice base as we see it in MarketSmith India. DLF is showing significant signs of good traction as far as numbers is concerned. And so is a Prestige down in the south. So a little bit selective out here at MarketSmith India, but Godrej Properties is something that we will keep on our buy watch list, and DLF and Prestige, one can continue to hold these stocks.
Put up a 1 year chart of Laxmi. I mean, it's not the only one. In general, chemical stocks have had a pretty rough ride last few months. We'll get the 1 year up for you. There we go. Very volatile and bouncing from deep low levels of about 220 thereabouts. Mayuresh, not sure if you track this company. Give us your view if you have one. Otherwise, overall chemicals, I mean, would you be a buyer considering this is one area of the market which hasn't run up in the last couple of months?
Afternoon, Surbi. Yes, I think it has been a large underperformer, but it was one of the major outperformers during COVID times. Obviously, the kind of destocking that is happening, the Chinese oversupply into the markets is pushing a lot of these bulk commodity chemical prices down substantially. And even the niche chemicals, they are probably getting hit because of lower demand. So I think we'll remain a little bit more selective in this space itself. AB Organics is one stock that we probably will still keep on our radar. 2-3 very interesting things that are happening for the company as a whole. Their specialty product pipeline or the specialty chemical pipeline is improving at a very decent pace. Obviously, I think agrochemicals and pharmaceuticals, where they supply a bulk of their product suite, is expected to grow decently. Maybe a couple of quarters pain for the sector as a whole, but it should start bouncing back quite smartly. Even for Laxmi, as an example, the ethyl intermediate market, which is almost 55% of their overall revenue, and specialty intermediates, which is 45%, it's been struggling over the last few quarters. So I think even if demand starts to pick up, which it should in the next few quarters, I think numbers might just be a little bit on the softer side. Margins will show signs of improvement for players as a whole, with input cost deflation that we have largely seen. But to a large extent, I think we'll remain extremely selective, even if valuations remain attractive. We'll wait for 1 or 2 quarters of turnaround. Till that point of time, Mayuresh Organics probably remains one of the stocks within this space.
Mayuresh, IT stocks, they're looking a little bit nervous Could you revise with us? What do you have in your portfolio, and what do you think that will look good from here?
So Nigel, as a disclaimer, on our global focus list, we have stocks like a KPIT and a Persistent, but we bought them at very low levels. So no fresh buying at these current levels. Obviously, I think the nervousness that is coming through is with the expectations that the management commentary might be a little bit weak surrounding IT stocks at this juncture. Obviously, deal wins have been quite fabulous. TCS, Infosys, HCL Tech have all reported good deal wins in the past few weeks. But I think a lot of pressure points that are coming in, and as we speak to our US counterparts, I think the expectation is that orders will start slowing down. The other element is also pricing can start coming back to haunt these players if a slowdown is imminent in the next few quarters, and that can probably have a say in terms of how next financial year numbers will play out on a good base that they will create in the past 2 years. So I think all depends on the execution of numbers and the commentary thereof. But as a disclaimer, as I said, we have KPIT and Persistent, but they are at lower levels.
Mayuresh, have you looked at this company called Mishra Dhatu, Midhani? They're into metallurgy, and a lot of defense companies supplying to ISRO for a long time. It's a PSU, but prospects look good. We had them on the program. I think it's almost been about more than a fortnight, maybe almost a month now. Outlook looks pretty good.
It seems to be the case, Prashant. And for all these stories, including Midhani, I think the structural part in terms of buoyant order books obviously stay. So from a structural perspective, over the next 5 to 7 years, with order books expected to increase even further in the next few quarters, a large part of the take that probably happens is operating leverage will play out because all these orders are coming with a reasonable amount of margins. Now, the other interesting aspect for a lot of these companies, Prashant, will be the fixed asset capacities that they've probably got to execute the current order book. And that is to a large extent limited unless they expand their fixed asset capacity to a large extent over the next few quarters to suffice these order books sufficiently within the timelines might be a difficult ask. And therefore, I think the kind of numbers expectations with the next 2 to 3 years in perspective, even if you roll over at the utilization levels at maximum utilization, probably justifies the price that they're probably leading into. So yes, momentum has been there for all these stocks, but we are not ambitious probably chasing these stocks.
All right, Mayuresh, what about these couple of names? Oil India as well as ONGC, the proxy plays to to oil, but also there is gas out there which they're trying to ramp up. Both these two stocks, as we speak, have moved to the low point of the day. I think market watchers will be very happy if Brent crude prices dips further from here. But what's your view on both these two? ONGC and Oil India, they have some valuation support, they have some triggers as well. But what do you think about them?
Absolutely, no two ways about it. Valuation support is there. The dividend yield is fabulous, Nigel, for both these stocks. But again, I think it's an entire play in terms of how oil prices will move. Over the last few weeks, we at MarketSmith India have met a few of the local and global oil experts, and we have spoken to them as well. And a large consensus is expecting oil to probably stay for a larger part. The short-term variations can push oil with an upside risk with what is happening geopolitically. But they are expecting it to remain between 80 and 90. And as the larger push happens towards greener, renewable sources, I think that margin will probably trend towards the lower end. So I think structurally, I think these stories probably are pricing in to a large extent oil remaining at lower levels. And to that bit, the government policies, regulations, geopolitics obviously rule these stocks. So I think we generally tend to stay away from these stocks because of such news flow, which can impact the stock prices over short to medium periodicity.
Okay. By the way, some interesting moves on a couple of IT stocks as well. KPIT Tech is having a very good session, 5% higher. Then there is Tanla Platforms, which is more of a mobile play, about 6 to 7% up on this one as well. Before we sign out, Mayuresh, your thoughts on mid-cap IT and some of these product/platform-oriented companies. They've had a great run. KPIT, of course, is one of them. Any views here? Would you look to buy?
Well, as I said, as a disclaimer, so we maintain, we do have KPIT at lower levels, and therefore we are holding on to the stock. The expectation largely is that the commentaries have been very good. The kind of deal wins and client wins that they're winning in the R&D space will continue. The stickiness with customers and the expectations in terms of margin performance being extremely robust might continue for a player like a KPIT. Obviously, valuations have gone through the roof at this juncture, and therefore anybody who's riding the momentum can definitely ride on the momentum. But in MarketSmith India, I think one space that we are liking, so we just to wrap things up, is the road construction players. I think a lot of these players will do exceedingly well, in our opinion, in the next few quarters. A lot of government focus and initiatives that are surrounding this space, with the intention also to clear and complete a lot of road projects in the next few years. I think this space can look very, very interesting. KNR, BNC, probably.
Okay, all right. Got that. Mayuresh, thank you very much.